Welcome, traders, to an essential discussion on mastering one of the most detrimental habits in the financial markets, overtrading. In the fast paced world of trading, the allure of constant action can often lead us astray, transforming potential gains into significant losses. This video isn't just about identifying the problem, it's about equipping you with the psychological tools and practical strategies to overcome it. We'll delve deep into the why behind overtrading, exploring the emotional triggers and cognitive biases that push us to make impulsive decisions. By the end, you'll have a clear roadmap to cultivate discipline, patience, and a more profitable trading mindset. Let's begin this journey to transform your trading approach. First, let's define overtrading. It's not just about the number of trades you make, it's about the quality and rationale behind them. Overtrading occurs when you execute trades excessively, often without a clear strategy, proper analysis, or in response to emotional impulses. It's a common pitfall, especially for new traders, driven by the misconception that more activity equals more profit. However, the opposite is often true. Excessive trading typically leads to higher transaction costs, increased stress, and ultimately, diminished returns. Recognizing the signs of overtrading is the first step towards recovery. Are you constantly checking your charts, even when you have no open positions? Do you feel an irresistible urge to enter a trade just because the market is moving, regardless of your strategy? These are classic indicators. Another sign is taking trades that are too small to be profitable after commissions, or increasing your position size after a loss to get back to even. These actions often stem from a place of fear, greed, or a desperate need for validation. Understanding the psychological underpinnings of overtrading is crucial. Fear of missing out, or FOMO, is a powerful driver. You see a stock soaring and jump in, fearing you'll miss out on profits, only for it to reverse as soon as you enter. Then there's revenge trading, where you try to recoup losses by taking impulsive, poorly planned trades. Overconfidence, especially after a string of wins, can also lead to taking on excessive risk. And let's not forget the dopamine hit. Each trade, win or lose, can trigger a release of dopamine, creating a behavioral loop that encourages more trading. The effects of overtrading are far reaching, impacting not just your capital, but your mental well being. Financially, it erodes your capital through commissions, slippage, and poor execution. Psychologically, it leads to stress, anxiety, frustration, and burnout. This can create a vicious cycle where losses lead to more impulsive trading, digging you deeper into a hole. Now, let's get practical. Here's a checklist to help you identify if you're currently overtrading. Do you find yourself trading outside your planned hours or without a valid setup?
Are you constantly moving your stop loss or taking profits too early?
Do you feel a sense of urgency or anxiety before placing a trade? If you answered yes to any of these, it's time to implement some strategies. The first and most critical strategy is to develop a robust trading plan. This plan should clearly define your entry and exit criteria, risk management rules, and daily trade limits. Stick to it religiously, no exceptions. Next, implement a cooling off period. After a winning or losing trade, step away from your screen for at least 15 to 30 minutes. This break helps to reset your emotions and prevent impulsive follow up trades. Consider using a trade journal. Document not just your trades, but your emotional state before, during, and after each one. This self awareness is invaluable. Finally, focus on quality over quantity. One well researched, high probability trade is far more beneficial than 10 impulsive ones. The ultimate goal is a mindset shift. Embrace patience as your greatest asset. Understand that the market will always be there, offering new opportunities. Cultivate discipline by strictly adhering to your trading plan. And practice self compassion. Acknowledge your mistakes, learn from them, and move forward without self recrimination. To recap, overtrading is a psychological battle, but one you can win. Identify the signs, understand the psychological triggers, and implement practical strategies like a robust trading plan, cooling off periods, and a trade journal. Shift your mindset to prioritize quality, patience, and discipline. Your journey to becoming a more consistent and profitable trader starts with conquering overtrading. Thank you for watching. If you found this video helpful, please like, share, and subscribe for more insights into trading psychology.